Traders, welcome back to my channel. In this video, we're going to talk about price action rules, how to use them to identify high probability setups. Because there's a reason to price movement. The candles are not random. They are following certain rules, and using price action rules, we can get an idea what the market will do. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart, which means every single candle represents 2000 transactions. And I'm observing a trend range structure. Why this is a trend range? Well, because clearly we have move up, move down, move up. There is no clear strong downtrend or uptrend. The EMA, the 21 bar exponential moving average, is for the most part flat. So I need to identify my key levels because market will bounce upon reaching these key levels. But it's not the only thing I need to pay attention to. I can also analyze this most recent trend, because even in trend ranges, there are trends within. And from the bottom all the way to the top, notice we had a very strong uptrend that never managed to even confirm the EMA. So now that we are breaking the channel, according to trend line rules, we expect for prices to retest the new extreme. We're not expecting reversal just yet. We expect for prices to test the new extreme of this uptrend. And also I would like to bring your attention to the left side of the chart, because the high probability setup that we're going to be looking for is a variation of a two-legged pullback, and market moves in pairs of twos. And you can see you have the downtrend working lower, which consists of larger two legs like this, the first move, pullback, second move, but also there are two-legged pullbacks inside of the two-legged pullback. So you can see why the market moves in pairs of twos. So the stock market opened a couple minutes ago. We're looking at this bullish candle. And by the way, when the market opens, which is 8:30 Central Standard Time on my chart, you want to be careful placing trades a couple minutes before and after the open, because it is very common after the bell for price action to whipsaw. There's a spike in volatility, a little fake out. So this candle right here opened exactly at the market open, and you can see there was a little whipsaw. So you definitely don't want to be trading exactly around the open. It's very common for volatility to be fast. It can be a little fake out. So be careful to placing trades a couple minutes before and after the open. So we can see that the downtrend played out with the breaking low. We have somewhat over two legs down, even though the second leg is shorter, and prices are breaking above EMA. So as we already know, the bias in this market is more bullish because we still expect new high of this uptrend. So the setup I would be looking for is possible high-low confirmation setup or the failed second entry short, but I can see that the prices already are rallying up higher without even pull back to the EMA. So I just have to watch here, and we just formed the new extreme. So the new high has been formed, and at this point I expect correction or reversal. And since this was a trend range structure, most breakouts will fail, and notice prices broke above. They're failing and pulling back. So I'm leaning more bearish at this point because I have a clear sideways structure break new high. I can already see EMA rejecting, so this is a little bit more bullish than I expected. And notice now I'm observing this. And there's a little clue that can help me to identify the fact that I'm not really looking to sell just yet, because this right here looks like a two sideways and broad legs down. We have a first leg down, pullback, second leg down. And since I'm trying to predict potential reversal, it should be part of one move, but we have two-legged pullback, broad one, and EMA keeps projecting once and twice. And this is telling me that I'm not really looking for failed second entry long to get back into trend range, because notice if I draw too wide of a channel, it doesn't really fit that well. And the reason for this is because these two legs are too separate from one another, and EMA keeps rejecting prices. So even though I'm more bearish, we're most likely not going to get a failed second entry long. And notice prices are working higher still. Okay, so it is not uncommon for prices to form two legs to a new high according to rules, but prices are above EMA for a long time. So already you can start to hint that the prices are a little bit more bullish than expected. Okay, we're breaking lower. I'm going to redraw the downtrend. Micro double bottom resets the count. I have first entry short, another bottom, and we're pushing back above EMA. Okay, so something is changing. We cannot make it even to the bottom of the trend range. So just by following price action, you can get all the information you need, because this bearish spike was supposed to produce some reversal, but that didn't happen. EMA didn't reject prices, and we are back above EMA again. So if I'm going to zoom back, I can see how bullish this structure is, and I have so much price action at these highs, I can actually even locate the potential smaller trend range at the top of the main one, because you can see we broke higher and EMA is flattening, a lot of price swings up and down, and generally you don't want to have so many bars and failed breakouts above your main key level. And notice we now have high-low setup. We have somewhat of a triple test, one bottom, double bottom, triple bottom, strong push above EMA, and this is the first decent high probability setup. Why? Because we're back above the EMA, we're back above the high of the day key level that acted as resistance at the very beginning and now acts as a support. Great tier 1 signal bar, and market keeps working higher. Now you would be expecting full second entry short, but it's too far from EMA, you cannot take it. You actually have a small break new extreme, and notice prices keep going sideways, so this is very unclear, just small tight trading range, so I'm just being careful. I'm not even trying to touch this, so you can see it's very hard to identify the bias, but you can see that the bias is definitely bullish. Notice how each new major low is higher than the previous one. Prices cannot even make it to the middle of the initial trading range. In fact, a brand new small trading range was established at the highs of the main one. So there is definitely a bullish bias. So you're not thinking about selling because you're most likely going to push higher. Okay, and prices are trending to the upside strongly. So at this point, the structure of the market changed and it's now bullish. We are trading a bullish trend because we eventually broke higher. So I'm looking for a couple of channels. At first, I was looking for some channel like this, but this channel keeps getting a lot of overshoots, and even this channel doesn't really fit that well. Eventually, I selected a little bit broader channel. Actually, I think something like this, which you can find with more confirmation. Important thing is to look for some pattern because you have a one spike and a sideways structure, and as you can see, price is working higher. Okay, we're correcting to the EMA, but we're still far from EMA. I cannot take a long. High probability setup would be a two-legged pullback at the EMA. We're still far from EMA, and prices keep working higher. Okay, so now you can start to identify, okay, there's definitely a channel. If you didn't have the channel, now, if you're observing this, notice how EMA is pointing up. Notice how the momentum is picking up. At this point, there's a spike and a channel pattern. Like I said, first I was looking at this, but this had overshoot, and it doesn't really act as overshoot because overshoot should be erratic break of the trend channel line, but this is more gradual. This looks like a stronger trend. So I'm gonna select a channel like this. You can see spike and a channel. So now that the structure is bullish, what am I expecting? Finally, I have a clear bias, so I'm expecting high probability setup, which should be a two-legged pullback, second entry long at the exponential moving average. Here we had the second entry long. The signal bar was horrible, but I'm looking for something like this. So prices are correcting. Okay, I'm going to redraw the short and downtrend in play because not only I'm looking for the main trendline rule, the trendline rule also fits for the corrections because there are micro trends inside of the main one. So notice we're breaking below. I have a second entry long, new high, first entry long, pullback, second entry long. Can I take it? I cannot. Even though it is working, I'm not interested. Why? Because it is bearish bar and it's below EMA and the downtrend is in place. So three factors that are against this second entry long, and I need to be careful. Okay, EMA is pointing back up and we're above EMA. So now that I have a second entry long and we're back above EMA, bears are attempting to create new extreme. And if we get high or low, that would confirm the second entry long. And notice we have high low confirmation setup of the second entry long. New high, first entry long, second entry long, high low confirmation setup. So this is a high probability setup, high low confirmation setup. It is closing quite close on its high. So it is a bit more aggressive, but it is okay setup, high low confirmation of the second entry long because you're back above EMA, you trapped all the sellers attempting to create new extreme, and the main bias of the market is clearly bullish. We're trading a bullish trend, spike, and a channel. And you always want to draw and look for some channel. You will see why. You would have to write this out. The stop loss goes one tick below the signal bar, which is this one. And eventually you would have scalped out. You have a failed second entry short, new low, first entry short, second entry short failure, but the signal bar is doji. It's not even that, it's more of a bearish bar. Look at the stim at the top. So you can sell. It's also a little bit congested. Okay, we have a triple test, but the signal bar is not that great and it's below EMA. Triple test can form below EMA, but it's overall a little bit too sideways. Can get a second entry long. We can't get a second entry long. I will mark this triple test. One bottom, double bottom, triple test, and market keeps working higher. And notice once again, clear bullish structure. So what I have to do, redraw the channel again. This is pretty straightforward. I'm just waiting for prices to correct. I don't want to buy at these highs because I don't know when exactly the market is going to pull back. We want to buy low with the discount when the correction phase will deplete. That's why we're using price action rule. This is why we're looking for the two like a pullback. We're drawing the short-term channels because it will tell us and indicate that the correction phase is over and the push phase will begin. You can see the push phase is the place where you can catch a major runner. If you keep buying at the highs, yeah, this may work here, it may work now, but next time you will buy here and it will reverse on you. Okay, we have a downtrend working lower. We have break, micro, new extreme. Am I looking to sell? No, since the main bias is bullish, as long as this trend is in play, you're only thinking about buying. This is why you have to identify and learn to analyze the overall structure, clear a series of higher highs and high lows, which is a bullish market. And as long as this pattern is in play, you're following the trend line rule. So you're not even thinking about selling. Only thing I'm doing is letting the bearish correction play out and look if you push above EMA and get a high probability setup. Okay, we're breaking above EMA. So what am I expecting? We have a new low. What am I expecting? I'm expecting naturally high low or failed second entry short. Okay, we're pushing higher, but we're already moving too far up. And we don't even have a trigger for high low here, but it will be still so far away from EMA. And notice what we have. New high, first entry long, pullback, second entry long. And this right here is a high low from this low, because this is technically like a first entry short, but the signal bar is bearish. If you have more of a bullish bar here, this would have been a great high low, second entry long, new high, micro, first entry long, second entry long. But the signal bar is my chart. Look at this, how bearish it is. But you can see once again, the downtrend played away to break new low, correction phase ended, push above EMA confirmed the bullish momentum and the overall bias, and this right here would be the great place to go long. Unfortunately, the setup didn't form that well. I'm going to redraw the downtrend. Okay, so not only I'm trading a bullish trend, isn't the correction a little bit longer? Notice how EMA is suddenly getting flatter. Here was pointing straight up and now it's flatter. And there's more two-sided trading, so it's starting to resemble a trend range. So there is a confluence of multiple key entry points. You don't have to just get a tunnel vision on the uptrend. So I can see that I can find a potential support, something like this, because clearly we're starting to go sideways, which if the support is going to hold, it's going to give me more confidence because I'm going to combine the support with the uptrend. Okay, we break new low, which means that the downtrend played out. We're still above EMA, we're still below EMA, and this spike down was quite strong. So if I want to go long, I want to see push above EMA just like I did here, and a failed second entry short. So we have a new low, first entry short, can we get a failed second entry short? We have a second entry short, but there is no failure and market created another leg to new extreme, which now is more significant. You can see this was too tiny, probably not that many traders considered it as a break and new low because this was still kind of like a part of one move. This is more significant sideways break and a new extreme. For this reason, you don't want to take a high low because this spike down is so strong. You don't have clear two broad sideways legs down. This is a steeper move down, which the new low is very insignificant. So you really want to see push above EMA first. Notice how steep it was. So now you have a clear the sideways break, new low, and now you have a new low, first entry short, pull back. I'm expecting for second entry short. I want to briefly talk about this high low second entry long because you have a micro double top, first entry long, pull back, second entry long. And this is a very tempting setup, but this is definitely more advanced. Why this is a decent setup? Well, because the main bias for the day is clearly bullish channel. This is the first break of this bullish channel. So just like at the very beginning of the session, we expect a new high. We are expecting the same thing. We expect for bulls to retest the new high. And this is why the trend line rule is so crucial. And this is why we always need to draw and look for the channel, for the pattern, because it will help us to not reverse the market too quickly because we're still thinking bullish. So this right here is not only break a new low, we expect new high, but also a failed breakout below this smaller trend range. It's a second entry long high low. It is more advanced. So if you're trading this, you definitely need to know what you're doing because you're buying quite in the middle of no man's land. But notice how many sellers must have gotten trapped here. Great signal bar. You're probably going to pull back. The safer way is to wait for push above EMA and a failed second entry short. Okay, you have a great bearish bar, which is probably going to trap a lot of sellers. And notice, great failed second entry short. So this right here is a great high probability setup. I can also redraw the short and uptrend. But notice, there was no trigger. I was preparing my limit order. I was ready for this great setup, but there was no trigger. It stalled. So unfortunately, I had to cancel my order. and market eventually continue working higher. You can, let's say, enter above this inside bar, but a lot of times no trigger will help you to stay away from fake out trap. You have to be really advanced and really know what you're doing to trust going long if there is no trigger, because there's a great failed second entry short. And why this is such a great failed second entry short? Well, because when I'm watching this live, I cannot even think about one single bearish reason to take the second entry short. There is only a bullish reason. And let's talk about, for example, this. You have a leg down, you have a high low, but this downtrend doesn't have new low and you may have second leg down. So there is one conflicting belief. Let's say here, you have a second entry long here, but you just broke above the trend range and you may have a strong failed breakout, you may continue working lower. So there's always some conflicting belief, which is normal. This is how price action works. But here, all the signs are screaming go long. The downtrend has a clear break, new low. You expect new high. You're coming after failed breakout. You're back above EMA and a great signal bar inside of this channel. So there's absolutely no reason to think sell and all the reasons to go long. So this is the easy bread and butter setup that you need to master, and you don't really need much. Every single day there are 2-3 easy setups that look like this, that if you're patient and you take these setups, you can get rewarded. And this is basically what I'm trying to do, because if you're a beginner trader, you're probably forcing your will too much on the market. You're constantly asking the market, is this the proper setup? Is this the proper setup? Should I go long here? What's the market doing? And you're constantly chasing the market. It feels too rushed. Your heart is probably racing. Your hands are sweaty. And I understand, because I was the same way. But when you get a little bit more screen time, a little bit more experience, it actually flips a little bit. Once you get more experienced, and this will become a routine and mundane, you will sit back, calm, and you will just watch price action develop in front of you. And you're no longer chasing the setups. You're just waiting for price action to come to your key entry points and offer you a setup. So that's generally a sign if you're ready or not. If you're still too excited about trading and you're looking to pull the trigger on every single candle, you're too excited to find a setup on every single move, and it is exciting, that's probably a clue that you're just not ready to trade with live funds yet, because this should be really boring, it should be mundane, it should be a routine. And remember, this is a marathon, not a sprint. So this will take some time. Now you even have high-low confirmation setup, which is a decent setup to take a chance again, because new low, first entry short, second entry short failure. And now you have a little like a small breakout pullback, high low, EMA keeps holding again. So great signal bar. But notice on my chart, I have 2-tick gap, which is very unusual. You don't see that every single time, which is very hard to use a limit order. But if you don't have a gap, you can go long here. High low confirmation setup of the failed second entry short. Market attempted to create new high, almost reached it, and it's correcting. Okay, so I need to redraw the downtrend. Now, we don't have a new high. Am I reversing? Not yet. We still may get a new extreme. I'm going to observe how this support will hold. Let's see what can happen. Okay, and wow, market is reversing all the way down. So my initial analysis is wrong. The bulls looks like are not in the market. It looks like they're depleting strong. And attempt for a new high looks like maybe enough, because there was some resistance. So buyers are considering this move up as the new high was tested. Notice we're working lower, new low, first entry short, second entry short. We have a second entry short, but the prices are far away from EMA. And once again, I'm using the trend line rule. This downtrend is most likely going to get new extreme. Market has shifted into bearish structure. We're far away from EMA. I cannot take it. Okay, I can see that we had a congestion here. You can see a lot of bars just stacked next to each other. Prices form new low. So at this point, I need to pause my shorts. We can have correction or reversal. First entry short, second entry short. Am I interested? Not yet. There is not even a trigger anyway. Okay, but this is interesting. After there is a new extreme, break new low, prices are failing to break the EMA, which is definitely indicating no reversal, no bullish reversal. Maybe a longer correction or a continuation of the downtrend. Because notice we have first leg up, break, second leg up. We have a larger two leg up pullback, strong rejection. And notice we have a great lower high. This breakout area was tested. You broke lower, tested the congestion. It held once here and prices came back and it held again. So this is another breakout pullback, and this right here is a lower high confirmation setup. Technically all double trap, but visual to like a pullback. EMA held here, here again. The support is acting as resistance, and after there's a break new extreme, you may be wondering, hold on, but we cannot sell. Yes, we cannot sell the first second entry short. We know that it's okay to sell the confirmation setup after second entry short after there's a new low. So the confirmation setup is lower high, there's a great signal bar, EMA kept holding, and once again, great high probability setup. The market keeps working lower, and notice how you have an actual new low, first entry short, second entry short, but the bar is too big, you're selling too low, but prices keep working lower. So there's probably a different channel. This channel doesn't have that many confirmations. Okay, this channel looks pretty well. It aligns with the EMA and it fits perfectly at the bottom. Notice how many confirmations at the bottom and how many confirmations I have at the top. It aligns with the EMA. So the bias is bearish. Okay, we're breaking the channel. You have a new low, first entry short pullback, second entry short. Actually, we have a second entry short here, which I was on my break when this setup formed. But notice you first pushed above EMA, and this is a sign that something is off, and also it is an inside bar and you're not bouncing off the key entry point. So notice how EMA did not reject prices like here, here, and here. You suddenly pushed above and it is an inside bar. Now if you took this setup right here and took a chance, I can see why. I'm gonna mark it for more novice traders that I can see why you would take this, because there's a tool like a pullback. But it is important to remember what's going on here. The EMA didn't reject prices. In fact, it first pushed above, and you have lackluster inside bar that you didn't even have a strong trigger above this bullish bar. So definitely something is more bullish than expected. You can see this would have ended up being a losing trade, but decent setup to take a chance if you were watching this live. Okay, we expect new low for the downtrend. We have a lower high, but we're too close to these lows. We're not fully at the EMA. You can get a decent full second entry long. We have a full second entry long, but the signal bar is doji again. And we can't really enter because we cannot sell this. And by the time we get at this bearish bar, it's already way too close to these lows. Note this. Okay, we have a trend range. The bias still remains bearish because the downtrend needs to get new extreme. We have a new low, first entry short, pullback, second entry short, but it's quite in the middle of no man's land. It is very tempting, but there is no key entry point just yet. It's not fully at the resistance. Market keeps working lower. Okay, we reached the new extreme. Do you want to go long? Not yet. You would need to see at least felt second entry short above EMA, reversal pattern, which never formed. You cannot take high low just yet, because notice how bearish this was. You need to see reversal pattern. Market keeps working lower. Okay. So nothing pretty much. We can't sell, we can't go long. We're finally breaking above the EMA, new low, first entry short, second entry short failure. So possible reversal pattern, but it formed really ugly. Barely above the EMA. I can't take it even though it worked. You can see break new low, felt second entry short. And now I believe it's getting too late. Yes, we can observe how the price action is getting more bullish, because once you see small trend range forming at the top of the main one and we can't even make it to the middle of the main one, this is a good sign that the price is too bullish for you to think about selling. And for this reason, there is no surprise market continue reversing to the upside. Then you're just observing when the correction phase will end so you can go long. And this was the textbook felt second entry short that unfortunately didn't have a trigger. And then you can see trend down. You're once again waiting for correction to deplete. This was ugly to like a pullback. Everything was bad when it comes to signal bars, but notice a great lower high confirmation setup. And notice once again, look at the runner that it could have produced. These are the kind of setups that we really want, the ones that are really high probability without too many conflicting patterns, breaking low, and the market eventually is stalling. So I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.